One of the key questions still today is, are we going to have a housing market crash? People keep asking me that question again and again and again. Last week, on the last episode, I looked at the current housing market situation. In this episode, I want to cover the current rental situation, because that's going to give us a clear indication or a good indication of where we are in terms of supply and demand. So just over a third, 35% of the UK population are renters. That's a significant number. And in May this year, over 101,000 properties were available to rent in the UK. That's quite a lot of properties, by the way. If you live in London, around about 45% of your income goes towards paying for the rent for your home. And if you're outside London, again, depending on the area you're in, around about a third goes towards paying for your rent or your mortgage. The average UK rent is £985 per month, and that data is from earlier this month. And that's an increase of over 2.1% over the last 4 weeks. So rent's increasing. The average rent in London is £1,653, and outside London there's a significant drop, as you would imagine, to £825 per month. According to Zoopla, in August 2020, the average rent in the UK fell by 0.8% in the previous quarter. And the reason that Zoopla give for this is they are saying that the supply of rented properties, particularly in London and Edinburgh, is greater than the demand, which is causing the rent to drop. And they also believe that the annual rental growth outside London will halve from 2.2% to 1% by the end of this year. So obviously, if the demand is down, that means people won't be looking to rent properties. Properties may be empty. Therefore, we may start seeing more people unable to repay their mortgages, which isn't good for the marketplace. The furlough scheme will end at the end of this month, October. We're going to see higher rates of unemployment. Some of those people are going to be renters. They won't be able to repay their mortgage, which therefore means there's problems there. We could see even more properties empty, and the more properties that there are empty, the less obviously the landlords can pay for the mortgages. So it's all going to have a knock-on effect, which simply isn't very good news for the property market, especially obviously if you own property right now. The Office for National Statistics said that demand for prospective tenants is lower now than it was in February. Now, Airbnb landlords or providers lost a significant amount of revenue during lockdown, because people weren't taking holidays, they weren't traveling for work or using those venues stroke premises. And Money Week believe that many have decided to join the long-term letting market as opposed to using Airbnb, because obviously those providers have overheads and costs that they can't meet, so they need to bring the cash flow in, and they've just changed their properties from being serviced apartments, for example, back to short-term lets. The Telegraph estimates that this will cause a 35% reduction in rent for London landlords, but Airbnb landlords are choosing stability over huge profits, whilst the economy is still uncertain. So again, you can see a change in direction. Airbnb isn't working well, although of late that has picked up and revenues are back up and on the increase again. But there are some Airbnb providers who've obviously gone to short-term lets. Now, as you might know, that landlords must provide at least 6 months notice from 29th of August this year until 31st of March 2021 before seeking possession through the courts, and those eviction notices to tenants will not be progressed until 21st of September. In August, the average void period in the UK rose from 16 days to 18 days. So you can see demand is reducing. You can see void periods are increasing. Airbnb wasn't doing too well. Things aren't looking too good. We've got furlough coming up. People are going to, or the end of furlough coming up. People are going to lose their jobs. They won't be able to repay their rent. You've got the issue with evictions in terms of if people can't pay their rent, the landlord still needs to pay the mortgage. How's that going to work out for the property market overall? It's not looking very good. This suggests that there is tension in the marketplace. Based on this alone, are we going to see a dip in the market? I think so, absolutely. Right now the market's going strong. I shared in the first episode that properties are selling very quickly for asking price, above asking price, in my experience from the phone calls that I've made to agents and to sellers. But I think as time progresses, as we go into the first quarter of next year, as after the first quarter of next year, especially after end of March, I think we're going to see a dip in the housing market. Is that going to lead to a crash? Watch all the other episodes and I'll share my opinion with you based on facts.